So on the 5 minute, now you can see the engulfing candle, and it caused price to change direction from bearish to bullish, because we swept after manipulating. We had a strong displacement to the upside, and on the previous video, I'm indicating that you can enter at this particular time, at this level, but this is a high risk. This is a high risk trade. I tend to wait for price to have at least a break of structure to confirm the trend change. So we had this break of structure to the upside, and on the 1 minute. So on the 1 minute, now when you come to the 1 minute, so hello everyone, welcome back. Hope you're doing great. And in today's video, I'm going to walk you through the weekly analysis, the trade that I took, and what I'm expecting in the coming week. So let's get direct into the analysis. So as you can see, we are on the weekly analysis. We are on the weekly time frame. So this is the weekly analysis. We have been bearish, and wherever the market is bearish, I'm looking for sales. But in this particular trade that I took, I was looking for buys, and I was be able to get an A plus setup, to which I followed the steps that I'm going to take you through. So you go direct into the daily time frame. So on the weekly we are bearish. You don't have to do anything on the weekly. On the weekly, your work is just to observe. And as you can see, the premium and discount levels are still on the chart. So the reason why I call this premium and this a premium and this a discount, there was a time this was a discount and this was a discount. These are the internal structures, premium and discount. But currently we are in a bearish market, and that means that we have violated the discount, and it turns to be now, if we have a cross candle below the level, it turns automatically either from premium to discount or from discount to premium, depending on the market condition. So in our case, it turns to to premium. So we scale down to the 4 hour. So on the daily, there is not much to speculate, because on the daily what I do is I mark the previous day high and mark the previous day low, and again I observe that the overall direction is bearish, and I look for forms of liquidity. That is, if you have not yet known how I trade, you can go back to the other videos. I have other videos on the channel, and you can go through them and see how I trade. And on the daily also, we notice that we are in a bearish trend, but currently after manipulating this row, price is retracing back to fill in forms of imbalances. Also, something that you're going to notice on the weekly time frame is the body candle close of this week. Again, we swept this liquidity and we had this form of candle closure. That is yesterday's trading on Friday's trading. So we manipulated and we had this form of displacement. So what I expect come next week is bull market to at least rally and fill in the imbalance. But that is not a breakdown on this video. So get the notation back. So this was last week's trading, but I'm not going to go direct to it. I want to talk about this setup here. So I want to do a trade breakdown of this setup. So what we were doing, we had swept a significant amount of liquidity to the left side, and after every form of liquidity sweep, market tend to seek or to fill forms of imbalances. So in our scenario, we had taken this row, and also we had taken the rows around this area, these two rows. So these are forms of manipulation. These are forms of manipulation because they are resting liquidity on the higher time frame. So after we swept the liquidity, what I did is now scaling down to the hourly time frame, the 1 hour time frame, and on the 1 hour time frame, after we broke the structure on the structures on the left, we had this body candle closure, and you can see it has also happened on the weekly time frame. That is this week's closure. We swept the 4100 level and retraced back, leaving a good amount of pips, or offering buy side That's why I'm speculating that in next week's trading we might have buy setups if the geopolitical side of it or the fundamental part of it is not going to interfere with the technical. So we broke the structure, and then we had this form of retracement on the 1 hour. So after breaking the structure, market retraced back to the almost to the level, but failed to break this swing that was formed after breaking the 4100. And as you can see, we had a body candle closure below the 4100 level. No, we didn't have a body candle closure. After we broke, that's when we had a body candle closure below those swing rose structures, and we failed also to break this. And you're going to notice again on this candle, sorry, after rebalancing, we had this swing formed, and we failed to break this swing. Generally, after we failed breaking this swing, I knew for a fact that we are going to have a form of change of character, because this we were in a downtrend, so we were breaking lower lows and we were not breaking lower highs. So meaning that the lower lows that were created were weak, but at this particular time we failed to break this low, forming a strong wick to the downside. So price came to around this level and then closed on a bullish, and we had this candle that opened and engulfed the other body. But when you scale down now to the 15-minute, what I do when I scale down to the 15-minute is, first of all, put the indicator on. The indicator that I am currently using is called the ICT Kill Zone and Pivot, TFO. And that is the only indicator that I am using to get to know the random high, random low, basically the sessions highs and sessions low. So at this particular time we swept the Asian low and the random low, but as you can see, after manipulating or sweeping the liquidity on the Asian low, one thing you have to be keen is the candle that sweeps the sessions highs and sessions low. And also due to the time that I come to my charts, that is 2 p.m. Eastern time, I didn't catch this trade because most probably I could have entered with a small size around this level to get to at least the Asian high. But I waited for the random high, random low to be swept, so that I can target the random high and the Asian high during the New York time. But as you can notice, we had the New York AM open and the New York low formed at this particular time. So we have the New York AM and the New York AM high and the New York AM low. But based on the entry form, I entered before the sessions open, and this is a thing that I have also discovered. So after we swept this random row, market gave me a clear indication by having this form of engulfing candle, and it crossed above this swing structure around this level. So in the 5-minute, you can see the engulfing candle. So on the 5-minute, now you can see the engulfing candle, and it caused price to change direction from bearish to bullish, because we swept after manipulating. We had a strong displacement to the upside, and on the previous video, I'm indicating that you can enter at this particular time at this level, but this is a high risk. This is a high risk trade. I tend to wait for price to have at least a break of structure to confirm the trend change. So we had this break of structure to the upside, and on the 1 minute. So on the 1 minute, now when you come to the 1 minute, after we had this change of character and break of structure, we had this form of fair value gap that was located at this level, which gave me a clear indication that price wants to rally up to the upside. Let me remove the zones. So price rallied up, swept the Asian high at this particular moment, and we had these forms of liquidity that were resting above. So on this Friday's trading, we had this form of news coming out, that was the NFP, and it was a nice trade. But The mistake that I did is that after we moved a significant amount of pips to the upside, I pressed the stop loss to break even. That's why I ended up having this trade as break even. And also I married the bias, and that's something that I have come to see that it's mistake that I'm doing. And the lesson that I've learned is, if the trend is bearish, look for bearish setup. If the trend is bullish, look for bullish setup. So what I'm planning for next week trading. So let me remove these noises. So as you can see, price is engineering liquidity both to the upside and to the downside level. So we have liquidity on both sides. So depending on the current market condition, that is the bearish. If the market opens and sweeps the upside liquidity and fill in the imbalances that are located around the 4280, 4300 level, I'm expecting for a pullback, then change in market direction, and then continue bullish to fill in this form of imbalance that is located around the 4100 level again. But if we sweep the downside liquidity first and fill in this form of imbalance, now I'm going to look for a market structure shift or change in market direction and target the opposing liquidity, that is the swing structures around the 4250 level. So I have something written down and I want to be reading something. So the market will always give another opportunity. My job is not to catch every move, it is to execute my edge consistently. If you're also running to trust the process, I'll see you in next week's review. Goodbye.